Hello everyone. Welcome to today's session. So today is on a Monday. We are going to have the general view of the market. So we see how the market is going to behave this week so that we can prepare earlier. So the first thing before we even do the analysis is to, we have seen some developing news or even some breaking news that there was a presidential plane crash. So as you can see, so let me zoom. Okay, so you can see we had Iran's President Raisi, foreign minister, die in a helicopter crash. So that is from the Iranian official. So it's assumed that after the plane crash, the president of Iran and the foreign minister passed during that crash. So with that, we know that Iran is a major contributor in the oil market. That is in the OPEC. And we understand that that one might create some maybe political instability or even a pause kidogo in the economic, that is the economic development, which basically might also affect the oil production. So it's expected that we have some assets that may be affected by that event, which of course most of, or even the asset that might be affected greatly will be the oil prices. So it might affect the production of oil, considering that Iran is one of the major producers of oil. So basically, it might reduce the supply due to some few instabilities. Again, we have seen some few developments of late where we have seen some attacks between Israel and Iran. And we understand that with the president being there, he had been able to maintain peace and all that. So let's see. It's all about observing how will the Israel respond? How will the new leader respond to what maybe, or even to how Iran has been responding to Israel and all that? So yeah, we expect the oil prices to be affected in a way. So we'll be looking for some volatility in that. So we'll do analysis on it later. Again, looking at this market this week, the major economic events that we have. So if you can just allow me to filter so that we can have the major economic events for the week. So this week, the first thing that we can notice is that today being on a Monday. So today being on a Monday, we have some holidays, bank holiday. So we have Switzerland bank holiday affecting CHF. Euro, we have French and Germany bank holiday. Remember, France and Germany, they are some of the big economies in Eurozone. So we expect some volatility here to be affected. So we won't have much volatility. Again, we can see Canadian dollar, that is Canada. We also have bank holiday. So it means today with Euro, CHF, and Canadian dollar, we might expect less momentum in the market, less volatility in the market. So at least for today, again, being on a Monday, just be cautious with the market. Don't be too aggressive. So tomorrow being on a Tuesday, we can see we'll be having the Canada CPI. I will be having the Canada CPI. Again on Wednesday, we will be having the UK CPI. So those are the two major to focus with. And of course, on Wednesday, very early in the morning, we'll be having New Zealand interest rates. So everyone is looking up to when maybe New Zealand will start cutting the rates. And the moment they signal that, probably on Wednesday, again, New Zealand players will have some good opportunities. So from there on Thursday, it's more of economic outlook. That is the manufacturing industry and even the service sector. So that will be across the board, Europe, UK, and US. Yeah, which will be the major ones. So it's expected that we might have volatility tomorrow on Tuesday, Wednesday, and Thursday. We're expecting the markets to be volatile. So today we mostly trade using the technicals and maybe some few tensions that have been created. So through that, early in the morning, we have seen how gold has behaved. We have seen how the safe haven asset has behaved, a strong rally to the upside. And with the kind of rally that we have, these are the all-time highs. So we don't have any historic data to refer on that side. So the only thing that we have is to use the prices that we have on our chart. And just using the basics, because we don't have any historic data to use, just using the basics, we can say that if you didn't manage to get this movement early in the morning, then you are late in the market. So what we need to do is very easy because we can see gold is forming a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. These are higher high. So we will be looking for a formation of a higher low somewhere. And then we can continue with that bullish trend that we have. So we know gold is affected by a number of factors and the bullish momentum might continue even probably until even the US elections have passed. So the good thing with gold, it tends to obey the technicals, especially the retracements, 50% level. So you can see that one was around 50, extended to 61. So the other movement, let's see. So I think we used this week, the other day, we were doing analysis. Yes, and it gave us a good 50%. So this was the time on Thursday before. So this was on Thursday actually, while I was trading live with my TikTok group. So we had done this analysis and we expected a continuation to the upside from the 50% move. So we can see the move has already happened. So what we need to see again is a retracement of around 50% after we see gold starting to retrace, confirming our new high. Then we will be looking for around 50% retracement and then you can continue with your buys. So on gold, I'll say yes, it's a strong uptrend. But again, we are late in the market at the moment, but it's good because it's on a Monday, so we'll still have opportunities. So we wait for a retracement, then a continuation to the upside, considering that we're still forming new highs. So gold, we don't have much on it. About US oil, which we are expecting probably will be slightly affected by those factors, the plane crash that we've talked about. So we have seen oil even before the crash had obeyed this demand area. So this demand area is somehow key again in the market, especially in US oil, considering that you can see this high that oil had failed to break for a number of months from November 2023, and it had been obeyed till March 2024. And we can see the momentum that was able to break that zone and give us a new high was from this area. So from that area is where we had that strong bullish momentum that was able to break that area. And we have seen the prices, how they have been reacting on the same area. We have seen presence of some demand. So giving us a possibility of a return back to these highs. So we can already see the rejections. So meaning with US oil, if we are able to clear this minor resistance there on a 4 hour, because on a 4 hour it's forming more of a sideways on that demand. So once we're able to clear this one, then we can comfortably target probably around 85 or even 84 point something dollars per barrel. So that one will be the first target, okay? Which we can see the zone basically extends all the way up to these areas. So we can target these areas once we manage to clear these highs. So again, if it doesn't clear those highs and we see a deeper retracement back to the same demand, I will still be looking for those buys in the US oil. So at the moment where we are, I cannot execute a buy, considering that it's a resistance. Again, I might be slightly afraid to execute sells, considering the factors that, or even the events that have happened might result to oil pushing to the upside. Then I will be looking for some buys. But again, not at this area, unless at these lower prices, or once we break, or once we clear this zone. So that is my general view on oil for this week. At least it should give us a new high. So we can see we don't have any new high yet. Once it gives a new high, clears these ones, then I will be looking for those potential buys to continue to the upside. So that is my view on those two commodities, gold and US oil. So the asset that I'm keen on again this week is pound pairs. So the reason as to why I'm more keen on pound pairs this week is because we can see the UK inflation is expected to really drop to 2.1%. And if UK CPI manages to drop to 2.1%, then there is a very high likelihood that we might even see rate cuts in the coming sitting. So this one might really weaken the pound, considering this is the forecast, and they have been able to control the inflation. So pound is in my list, and Canadian dollar, considering again tomorrow we have Canadian dollar inflation expected to drop, but not as much as at the UK. So if we can have the Canadian dollar tomorrow persisting, especially above like 3.1%, and we have the UK CPI dropping as expected, then we can have a very nice movement on pound card. So I'll be looking on pound card, and again I'll be looking at pound USD, considering that the US CPI is still, US inflation is still on the higher side, but we're expecting the UK CPI to drop. So pound USD, pound card might be of focus according to me this week. And I'll do analysis. I'll start with the pound card. So going to pound card, I can see it's on a good critical area, as always. Before any major events, our markets tend to align themselves in these major areas, major zones. So this has been a key supply. This has been a key supply which has not yet been broken on pound card. So this has been a key supply, as we can see, obeyed for a number of times. Okay. So it has been obeyed for a number of times. We can continue with this one. Yes, and I'm really looking for sells from this zone, where that confirmation will be those economic factors. And as you can see, this area has a good momentum. So this area has a good momentum, a strong momentum. So whenever the prices drop from that area, we can see it's a strong momentum, strong bearish momentum. And I will be expecting the same to happen if we can see a weaker pound. So I'm looking for sales from this zone on pound USD, and I might expect it to drop. So meaning if that is obeyed, we can have some sales for a number of days on pound card. So going to a slightly lower time frame, 4-hour time frame, we can see the whole of that area, which you can basically reduce it. Okay, but it's a major area, so we know anywhere around those areas we can have, or even anywhere within those ranges, we can have those cells. So the first zone that we're expecting to give us some cells is where we are currently. From this point, you can see we had that sharp drop. So from these prices, you can see we had that sharp drop. So even before the news tomorrow, I might be expecting the same zone to give us those cells. And of course, if I do that, the stop loss should be, the stop loss should be slightly above that zone. And of course, the target to be huku chini. So maybe this might be the first target and this one to be the second target. Okay, so that will be the expectation. But again, I still understand. So if you execute the trade today, this might be an early trade. So that one is for somebody who's scalping. But somebody who has that patience, especially for swing traders, we can give it time until tomorrow, CPI. So if it can even manage to have pushed these highs, then we can still have a drop. So anywhere along this area, considering it was a whole zone, I'm looking for sales. So the best sell, the best stop losses should be Hukuju. That is basically above the previous high Huku. But from where we are, inside these ranges, inside this zone, I'm looking for some sales on pound USD. The only thing we are waiting for is a confirmation. It's a good thing it's on a Monday. So if we can have a confirmation today or tomorrow, meaning we can have a flow of some good bearish momentum probably until Friday. So that is my view. But remember that analysis is data dependent, meaning it will greatly depend on tomorrow, Canada CPI, and again greatly depend on Wednesday, UK CPI. So that will be a good movement, but it's data dependent. So make sure you understand how that data will be. Back to the final asset of this week again, pound USD. So you can also see pound USD has aligned itself again in a very nice area. So the same prices that we are, or even the last time we were at this area. Remember, it's when we had the US CPI. I've been talking of this one. It's when we had the US CPI on 10th of April, which was way strong. And we saw a strong rally, a strong bearish rally on pound USD. So again, I believe we might have a very nice momentum here, considering already the US CPI. It's not cool as expected, still on the higher side, lowering the potential of maybe rate cuts in US. So meaning we might see a stronger USD on the long term, might see a stronger USD on the long term. But again, this movement will still be data dependent. That is, we will be looking for some movements from this area, but we'll have a great confirmation on Wednesday once the UK CPI is confirmed to be on the lower side. So at the moment, we can see some slight movements. If we go to a lower time frame, like 4-hour time frame, so we'll be looking for some sales here. Once we have a confirmation, then we might execute those sales, expecting or even looking forward to the economic events to fully confirm. But again, if it breaks to the upside, the better. We can still look for some sales along these highs. But the general view of this market by Wednesday is to have that economic data confirm. And if the UK CPI goes totally to the downside, then that movement will be more varied. So those two movements on pound CAD and pound USD, they're at a good area where we can start looking for opportunities. But fully confirmed opportunities, they are more of data dependent. So we need to keep an eye on that. So that is it. Those are the two pairs that we are going to have an eye on, pound USD and pound CAD. Not forgetting US oil due to the event or even the unfortunate event that has just happened. So I'm wishing you a profitable week. Make sure you are well informed on economic events as you also consider the technical factors. So thank you. Have a profitable week ahead.